Traders, Brian DeMoe with DayTradingFutures.net. I'm going to do a video on the Australian dollar currency in preparations of the long expected consumer price index that's actually to be released today at 6:30 p.m. Central Standard Time. So you're looking at the daily chart, and you can plainly see the head and shoulders that started back in early November. And I have in orange, I have that downward trend line that I drew in, which is playing a role in a lot of the price action, dating way back to the head of that head and shoulders, which we can see here. And when we got to this recent area, it looks like about January 3rd, and it kind of just it broke through that when we had the unexpected, well below forecast non-farm payrolls data that came out. If you remember, that caused a huge jump in the Australian currency, and then we drop down. Now it's showing a gap down here on this daily. If we drop down into a 4-hour, you can just see that because the market was open during this steep drop. So anyway, so what we're going to talk about real quick is just what I believe you should do in preparations for the CPI cable that's coming out today at 6:30 p.m. If you're in a current trade, as you know, I posted a previous video that this would be a good area to go short, which my target area was here, and that panned out perfectly. Now, I am in a long position starting from this 87.78 level, which on the futures chart is about 87.48. And right now, I'm still holding on to that long position. Looking at the 30-minute, this does appear to be a bull flag formation here. So my target right now is just at this trend line at 88.16, or on the futures, that's about 87.92, 93 area. So my target price is or target area to exit my long position is right there. I'm hoping that it gets there before market closes. If not, that I will probably just close my position, taking the profits that I have. And the reason for this is because of the highly expected CPI cable coming out for Reserve Bank of Australia. You know, there's going to be a lot of volatility, and I would rather not hold a position at that time unless I was scalping. That's really it. But for any kind of short-term positions, I definitely recommend getting out of that. So when it comes time to have the data released from the RBA, what I would recommend you do is hold off on trying to ride the wave. Typically, if it's a negative forecast, the market tends to react faster than we can get the data publicly accessed online. So if you, for instance, monitor the fxstreet.com or investors.com's calendar, the print of the actual data does not hit as quickly as the market reacts. So it's really hard to gauge what happens immediately following that information. And so what typically happens is if you have something that's under the forecast, so a bearish indication, then sometimes the market will actually quickly skyrocket up. And that's a quick head fake, and that's there's a lot of speculation as to why that happens. In my opinion, it's simply that the market is just getting all the short stops out before it actually dips down into its corrected state. So in the event that we have an undervalued forecast, which is let's see, on the CPI we're looking at a previous is 2.2%, a expected or the consensus is 2.5%. So if it's, let's say, 2.2 or 2.0 or even 2.3, anything under 2.5, the Australian currency is going to dive bomb. And I do believe that we're looking at a 1%, maybe a little bit more, at least breaking the resistance and supportive lines that I have drawn right here. So in the event that it's low like that, what you may see is a quick steep up. And if you try to jump into it thinking, oh, well, the market's rallying, it must be positive data, before you actually see the data print on whatever source you're looking at, then you're going into a long position when it's just a head fake, and then all of a sudden it just dives bomb. So what I recommend you do is you look at a 5-minute chart, and you look at the 5-minute candle print, and you wait for that print or that candle to finish until the next 5-minute candle prints itself. And so looking at what we had happen back here on what was that the second, with the negative news that came out of Australia, and I don't recall, and I apologize, exactly what it was that caused us to dive bomb, but you can see that this candle, we had this 5-minute candle printed, and it was obviously very bearish. And then all of a sudden we opened here and we went down, we went back up. The candle closed about 75% down from that entire print, and then we just continued on here. So this is really a safer way to gauge the way that the market's going to behave, with any news that comes out. So if you're fortunate enough to have a resource that prints the cable data right at or right before the market starts reacting to it, then that's great, and you can, then you have a clear advantage, and that's awesome. So if you don't, which is the majority of retailers do not have access to that speed of information, then you're really going to want to wait until the first 5-minute candle prints. Look at the second candle, make sure that it's following that trend down, so this was the first 5 candle. The second 5 candle was red. There was a lot of volatility here, and this happened pretty quick. But so jumping into this short at this level here is really going to be, a safe bet for you, and you're not going to lose out on whatever longs you thought were going to happen due to a head fake. So waiting until the second 5-minute candle prints, and then following that is the safest bet. So that's what I'm going to be doing for the CPI release this evening. I will not be holding a position. I'm just going to wait until we see what happens. This line of resistance will be broken if it is a hawkish outcome, if it's above forecast at 2.5%. If it's below the 2.5%, we are certainly going to find new lows, probably in the low 8700 area. So maybe definitely breaking this line of support, and you certainly do not want to be caught in a long position should a head fake occur, and then all of a sudden it just drops. So again, wait for the 5-minute candle to print, take a look at what the data that actually comes out, and then jump into a position that's a lot safer for you to know the actual information or know the actual direction of where it's going to go. So that's all I have. Right now I'm just about to close my long position. It looks like we've got a little bit of a rally. My target is just about to get hit right here. So I will do another video either tonight or tomorrow talking about the new levels of resistance and trend lines that I see. And if you have any questions, as always, please contact us at DayTradingFutures.net. Thank you. Have a wonderful day.